It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Annabelle Droulers with Stephen Engle.
Well, we're counting down the open of the markets in Greater China. Our top stories this morning. Asian stocks edging higher as a cooling U.S. jobs market strengthens bets on a Fed rate cut next week. The yuan grinding closer as well to a key level of 7 per dollar, grinding stronger, that is. China's property crisis in focus, with Country Garden expected to get court approval for a $14 billion debt restructuring, but New World fails to win support for a key bond exchange plan. Also ahead, Emmanuel Macron arrives in Beijing for talks with President Xi Jinping, set to be dominated by a number of issues, including Taiwan and trade.
And Jensen Huang talks chips with President Trump. Nvidia said to be close to securing a win in Congress on its push to sell to China. Taking a look at the market action this Thursday morning, and we're seeing stocks here that are having a bit of a recovery. So you've got US futures that are flat, but overnight in the session, it was very much the narrative. Bad news is good news, and that's what happened when we got that jobs figures out from the ADP data, but essentially more evidence that the labour market is cooling in the US. So you're going into that Fed decision next week. You've already had the case very much set for further easing, but again, it's just another signal that you're going to get that cut. And so that, of course, is a positive for a lot of assets. So you're watching what's happening in the Treasury space, for instance. We did see them rising across the curve, but the two-year yield tracking back down to that 3.5% mark. Bitcoin as well, just to note, is not listed here, but Bitcoin has been an important asset because I think it shows you that the risk appetite is not going across to every single asset class, because it's continuing to trade around that 93,000 mark for this one. Golden Dragon Index as well, because I think we had the moves overnight in the session, but really just weakness there. So following what we had in Wednesday trading for mainland equities, also the HCI China Index rather in Hong Kong, but a drop. So here it was actually bad news is bad news, because we had the services activity data showing the economy remains sluggish. So that again was a downbeat sentiment for Chinese equities on Wednesday. But coming into Thursday, you can see here futures looking like we'll see some gains. I think if there's really one asset we're going to be watching in particular, it's what's happening with the currency. And we're going to have that fix, of course. Had a bit of dollar weakness overnight. We're getting very close to that 7 handle now. Yeah, the yuan strengthening, but not by that much on a daily basis. But it's definitely getting back towards that 7 to the dollar range. All right, let's bring in Huang now, managing partner and CIO at Lotus Asset Management. So, I mean, you've got kind of two themes. We can start China, we can start the Fed, but I think if there's sort of a broader narrative that investors are looking at, and I think specifically around this reporting, Kevin Hassett is firming up to be the Fed chair. There's maybe a little bit of concern. Is he going to be someone that's too close to Trump, and you're going to see those market jitters once again?
Well, I think everybody now sees that, whoever going to be the next chairman for the Fed, he is or she is going to cut interest rate immediately and also expand the balance sheet. And this is because, if you look at the repo market in the near term, right, so the repo rate is shooting above the Fed fund rate. So that means that, the repo market liquidity is very, very tight. So whoever gets to be the next chair, he will have to cut interest rate and also start re-expanding the balance sheet immediately.
I guess it's the question then of how far along are we in the easing cycle, because yesterday we were talking about just the number of different projections we're getting from FOMC officials. Essentially, I think it was 11 different projections of where the neutral rate should be in the last time we had that survey back in September. So maybe, one cut, December is pretty much done, but what about for 2026 then? Yeah,
I think the market is looking for a couple of more cuts in the coming year. I think, if you look at the precious metal prices, it's already, pricing in substantial easing going forward, and also probably monetary inflation. And I think as a result, if you look at especially silver, right? So silver is a cheaper precious metal, right? So it's continued to make new highs, and, people are betting on, aggressive rate cut and Fed balance sheet expansion.
Where do you weigh in then on, essentially, I know the stock market is not the economy, but with the Mag 7, it is a proxy, obviously, and there seems to be a little bit of heat coming out, again, concerns about the AI bubble and, as well, investment going into AI, as we've seen a number of different Fortune 500s concerned about that.
Yeah, I think, well, before this quarter, the capex that is going into the AI sector is actually still being funded by free cash flow. So I think as a result, I think before this quarter, everything looks okay-ish. But I think getting into this part, where, you're actually extending credit and borrowing money to do your capex, then, there could be a cash flow problem going forward. And also, if you look at the valuation of the Mag 7, right, and many of the related stocks, they look really frothy. So I think, we are getting into a bubbling stage. But I think, at the last stage of the bubble is the part where you get most of the return.
Where are tariffs going to play in the inflation story going into 2026?
I think tariff, on one hand, tariff is going to suppress demand, because price has increased, especially essential items for many of the U.S. Americans. But I think, in general, I think the effect from the import taxes is going to be lifting pricing pressure for the U.S. So I think as a result, as you can see, on one hand, the Fed is bound to cut the interest rate, but then on the other hand, inflation pressure is actually rising, and that is auguring for monetary inflation.
How do you game it out, though? Because I think that obviously there's delayed transmission on that. I mean, right now you've got, for instance, sort of the whole thing just being kicked down the can. You've got the can being kicked down the road. But Trump says he's going to be going to China in April of next year. I mean, maybe that's the point. You actually see some progress.
One should hope so, right? So I think, at the part where the economy is still not in the recession, and also, the price pressure is rising, but not like very substantial pressure on the economy, and then the Fed starts cutting interest rate, this is the part where riskiest actually outperform.
So my next question is kind of pivoting as well into Asia, and that's the situation with the U.S. dollar. We're going to talk about the yuan a little bit later.
That's right.
That is inching stronger slightly towards the 7 handle. But what's your outlook, given all what's going to happen with the Fed and the interest rate cut environment? What's going to happen with the dollar?
Yeah, I think the dollar is in a secular downtrend. Right? So once the Fed start cutting, once the inflation pressure in the U.S. economy is starting to be felt by almost everyone, then people would start pricing in a further dollar weakness. So it's a multi-year secular downtrend. But then during this downtrend, of course, we're going to see some technical rebound. For example, in recent months, we're actually seeing the U.S. dollar stabilize around 96, and now it's back up to 100 level. So I think you're going to see many of these technical rebounds along the way, but I think overall in the coming years, the U.S. dollar secular downtrend is going to continue.
Can you just go back then, I guess, to your commodities call, and as well how the direction of the dollar plays into that?
Well, a weak dollar would be good news for commodities, obviously.
Exactly,
and so besides the precious metal price I mentioned just now, if you look at copper price, for example, right? So it's going through the roof. Aluminium is going through the roof as well. So I think their strength is going to continue, as long as the expectation for monetary inflation is in place.
But also the expectations of tariffs as well, with the copper story, with a lot of the inventories being brought into the United States ahead of any potential tariff shock, and that's why we're seeing fresh records in copper.
Yeah, I think he's trying to make up his mind, what to do with the copper tariff. He's wavering, but I think even if he hasn't made up his mind on the duty, on the import duty, I think we're at the part of the economic cycle where commodities tend to outperform.
On the AI story as well, because you mentioned that we're getting toward the end of that bubble. What does a deflation of the bubble look like? Are we coming into a burst? Is it going to be a slow deflation? What's the characteristics, do you think?
Yeah, I think all bubble burst at the end. Right? So, we've seen many of these episodes happen. I think even in 2022, right? So when the Fed started raising interest rate, we actually saw the tech bubble deflated by 30%, which is quite substantial. So I think this time around, the bubble is even bigger than before. Everybody is putting in tremendous amount of capital into the sector. I think, the market tend to sort of overestimate the impact on AI in the near term. But then on the long term, of course, AI is going to transform the human society.
How does it play out then? I mean, who gets most burnt? Because, for instance, there was the Anthropic CEO speaking overnight at a New York Times event, but saying that they've been a little bit more cautious in their capex and spending really just a fraction of what OpenAI is looking at.
Yeah.
So if you've been a really heavy spender in this environment, are you the one that gets most burnt, or is there something else that you look at?
Yeah, I think people haven't sort of made up their mind. The US model really is that, the hyperscaler, right? So you're just throwing tremendous amount of money on AI, trying to scale up. But then the Chinese way really is, so we were making do with limited technology, limited supply of GPUs, and trying to maximize our output, from these limited resources. So it's a very different model of development. And also, Chinese development is open source. For example, the DeepSeek a couple of days ago, right? So actually released a new LLM that rivals the other.
Two updates.
That's right. So I think it's both sides are making tremendous stride in this area. I think it's two different models. It remains to be seen who gets to lead the world.
Later, we're going to pivot to talk exclusively about China. Later in the show, you're going to stick around. But I did want to ask you about the labor market again, because that's what's fueling increased bets upwards of 90%.
That's
that
right.
We're going to get a cut next week, Wednesday, December 10th. But again, it also dovetails nicely with the AI stories. We're seeing these corporates laying off people. Was it Amazon, 15,000 jobs, a number of things.
That's right.
So that's also going to be, as Belle talked about, the bad news led to the good news on the markets, but the bad news is also leading to more bad news, possibly more job losses and more labor market weakness.
Yeah, I think so. As this sort of breakthrough technology continue to develop, right? So as you can see, the lower echelon of the society actually lose out, right? So people keep talking about K-shaped economy. The economy that is the part of the economy that is dominating is the part that requires lots of capital, right? So because the AI capex is humongous, but then at the same time, as the technology being developed, then we probably need less labor, and therefore many laborious jobs being cut out. So I think as a result, later on, many of these jobs would have to be transformed into the other parts of the society where they find new ways to make a living. For example, these days, we have YouTuber, we have people, KOLs on the internet is making like millions of dollars, and then this is an entirely different lifestyle that cannot be imagined a few years ago.
All right, Huang, stay with us because, as we said, we're going to get more views on China in particular. But that was the managing partner, and CIO of Lotus Asset Management, sticking with us and back with the China market open in just a few minutes. Still ahead, though, because we're going to be sticking with that big tech theme and the competition between the US and China. But Nvidia CEO Jensen Huang doing the rounds yet again in Washington. He's there really on a regular basis.
Whenever Trump wants him there.
That's exactly what he told reporters. But having a meeting, of course, with President Trump and talking about these export controls to China. It's that big question, H200. Are they going to be able to sell it? Does China want those chips as well? We'll get more on what he's been saying next. But counting down, as we said, to the open of trade in Shanghai, Shenzhen, Hong Kong. Futures are looking like we're going to have a bit more of a positive start to the session than yesterday. This is China. This is the China show. We just got the Yuan fix in the last few moments here, and you're seeing quite a significant pushback from the PBOC on the strength, really, we've seen in the offshore currency, because the reference rate coming in at 7.0733, the estimate had been for 7.0569. So really, you have seen, I mean, it's not just, of course, it's a China story. You've got this optimism around maybe that rapprochement and improving relationships, essentially. But at the same time, you've had that dollar weakness overnight. And so that also plays into the dynamic. But we'll get more context on that because we have seen, of course, a string of fixes now set above the estimates by traders.
But they don't want it to strengthen too fast.
No, it's
a managed
orderly,
strengthening.
yes.
Orderly, yes. All right. Well, French President Emmanuel Macron Macron is due to meet with China's leader Xi Jinping in the next hour or so as he begins a 3-day visit. China is seeking backup from France in a dispute with Japan over Taiwan, among a number of issues, while Macron is likely to push Xi to back down on investigations into French pork and dairy. Let's get more from our China correspondent, Min Lo. So, I mean, there's Taiwan. I just came back from Taiwan yesterday, and obviously there are a lot of issues going on as the offshoot from the row between Japan and Beijing. But is Taiwan going to really play a significant part of discussions when it's essentially likely just going to focus on emphasizing the one China policy and what Beijing has been focusing on, and that is sort of reinterpreting the historical narrative following the Cairo Agreement, the Potsdam Declaration, and the San Francisco Treaty post-World War II?
I think the outcome is not going to change because I think France just doesn't want to wade into this controversy unnecessarily. So they have been calling for the status quo. And I think Emmanuel Macron is not going to repeat the mistake he made 2.5 years ago when he came to China, where he made some comments about Taiwan, talking about how Europe needs to maintain strategic autonomy, how it shouldn't be involved in accelerating a crisis that is not their own. And that comment at the time was seen as, something that perhaps limits France's support for Taiwan, and it brought a lot of backlash for Macron. And I think China now wants to hear something similar again from Macron, because Wang Yi, yesterday, we got this from the foreign ministry statement, Wang Yi had told his French counterpart in Beijing that he hopes France would understand China's legitimate position on Taiwan, that France would support China to prevent Takaichi from stirring up trouble here in this region and repeating the World War II mistakes. And interestingly, ahead of this trip, Wang Yi already made a call to Macron's political advisor, sending the same message. And right after that, the Japanese national security official also made a call to the French, to Macron's political advisor. And the two sides, France and Japan, then said that they would expand security cooperation and commit to a free and open Indo-Pacific. So Macron is clearly juggling a balancing act here.
The narrative ducks are being put in line by both sides.
Yeah.
Right?
Then how does it also play into I guess, Taiwan's efforts to bolster its standing on the international stage, which China obviously doesn't want? But the trade negotiations are ongoing between Taipei and Washington. What's the latest on that front?
Yeah, this is where I think there is a bit of a pushback from Taiwan, because we heard from Howard Lutnick yesterday on CNBC where he hinted that he is seeking this investment pledge from Taiwan. He said something north of $300 billion, which is quite a big sum for a small island nation. It's not clear whether that amount would include the pledges already made by companies like TSMC. Beefing up that Arizona plant already involves $100 billion or so of investment or more. But yes, and we hear Taiwanese President Lai Ching-te saying at a different forum that this pledge that the U.S. is seeking could only be achievable if they also get some level of support from the U.S. when it comes to land acquisition, electricity and water supply, talent development, immigration laws. We want to avoid a sort of raids on those South Korean factories in the U.S., right, that had spooked a lot of South Korean investors. So clearly a bit of a tussle going on here, and we know that Taiwan has been seeking to lower those tariffs from 20% to 15%.
All right, that was our China correspondent, Min Lo there. We are going to also shift tack as well, because on the tech scene, it's really that question around China's access to advanced semiconductors from the US. Would Washington be looking to allow, for instance, Nvidia to sell more advanced products, but also would China be willing to accept them? But to that end, we actually heard from Jensen Huang just in the last couple of hours, because he was in Washington on Wednesday, meeting with President Trump, also other US officials, but talking about this very question, whether Chinese companies and whether Beijing, of course, will give approval for them to buy the H200 chip if the US allowed their sale.
Going toe-to-toe against anyone, the American technology industry has nothing to fear. We are mighty. We're fast, we're inventive, we'll take anybody on. In the case of China, we shouldn't concede the entire market to them. They're formidable, but conceding that entire market, we ought to go compete for it.
Yeah, so I think that's a really interesting point that he's made there. And I mean, Jensen Huang has sort of said this on a number of different occasions. His main view is that you can't just simply
sell a degraded product
degraded.
to the China market.
I was going to say dumbed down, but that's definitely a more eloquent way of putting it.
They've seen that. They've seen their chips obviously be limited by export controls from Trump, and then a flip-flop, and then the H200 was all of a sudden, which is a watered-down or degraded AI accelerator, allowed to go into China. But what happened? China said, we don't want it. We don't want a degraded chip, and that's what Huang said, and we don't want one that we can also sort of say there might be security backdoors.
I think it's also a question, though, because part of it exactly, it's that security backdoors, and that's the concern from Beijing. And I don't even know, even if you could do H200 sales into China, whether China would really approve them, because obviously their biggest push is for national security and to build up their own tech self-sufficiency. So again, I think it's a big question. Maybe you can sell, but China might still not want them. Even if its companies do, the government doesn't. Well,
there's also this GAIN AI Act, which we're hearing is likely to be, well, we've already learned essentially that the restrictions on the AI chip sales to China was not included in that. So that tells us the lobbying by Nvidia did work. And that's going to go forward, perhaps does give a little bit of wind in the sails to Jensen Huang's aim, and that is to at least be allowed to sell the most advanced chips or even a step down to China.
All right, just taking you back as well, because this happened in the last few minutes. We had that Yuan fix coming out, and as we were saying, it's quite a wide gap between what traders were anticipating, where it's actually been set by the reference rate this morning. But you can see here, this is actually being dubbed the most forceful signal since 2022. So, yes, we were talking about trying to slow those Yuan gains. China maybe is open to an appreciation down to that several handle, but they do want to happen in an orderly way as well.
Yeah, that's right. So I think that's going to be the redhead going forward in the next week or so if it does cross over 7 into 6 territory.
All right, more ahead. This is Bloomberg. Keeping an eye still on what's happening with the offshore yuan this morning, because we have seen quite a big pushback from the PBOC this morning to the recent strength that we've seen in the offshore currency and onshore as well. But essentially, we had the daily reference rate in the last 10 minutes or so at a level that was significantly weaker than the average estimate in a Bloomberg survey. So it's just an indication to us. The central bank here wants to,
tap the brakes a bit.
Exactly, tap the brakes.
I mean, there have been growing chorus of calls, including yesterday, Miao Yanliang, the chief strategist at CIIC, saying now is the time to allow the yuan to strengthen. It'll give a little bit more purchasing power for Chinese consumers. They want to boost consumption. They also want to import more. So that gives a bit more of a fatter wallet for China to import more. And again, it's just goes in line in lockstep with how Huang talked about, and that is a weakening dollar.
Yeah, that's right. We had seen that dollar weakness overnight, especially after you had those ADP figures coming through, more signs of weakness in the US labour market. But we'll leave you there. We are looking at some gains at the open here, particularly notable for the tech stocks and also the HSCEI. The open is next, and this is Bloomberg.
Welcome back. You are watching The China Show. We're counting down to the open of the markets in, 40 seconds. The countdown is on, Belle.
Yeah, that's right. I mean, we are looking for some gains here really across the board today in the session. It's following what we're seeing broadly for Asian equities and what we had in the Wall Street session overnight, because as we were saying, we had that labour figure coming out, or the jobs figures coming out from the ADP numbers, and just telling us there's more signs of weakness in the US labour market. So that really does bolster the case for the Fed to cut next week. So that's the story for as we said, equities in Asia, the complex in January, seeing a bit of a rotation as well away from tech stocks. It's something to track, of course, for a lot of these tech-heavy benchmarks in Asia, like Taiwan, Japan and Korea. But this morning we're taking a look at what's happening in the mainland session, because yesterday it was actually a story of bad news is bad news, because we had some essentially some economic data coming out just pointing to more sluggishness in the economy. You've got those woes in the property sector that are extending. So we did see Chinese mainland equities under pressure in the session. also in Hong Kong. But this morning you are just lifting off a little bit in the session so far. Continuing to track, as we've been saying, what we're seeing with the offshore yuan, also the onshore currency this morning, but really notable fix today because we actually saw the weakest fix relative to estimates going back to 2022. And so you have really seen just that pushback now from the PBOC quite forcefully against the strength that you've seen in the currency. Lots and lots of calls out there. We will, or can we hit, when will we hit that 7 handle? But let's take a look at what's happening in Hong Kong equities today as well, because a couple of different things we're tracking. I think when you take a look at the specific stocks to watch, there's going to be one in focus, and that's going to be New World for us because we had that debt swap or bond swap target, but it's actually failed. It's come short. We've got Trista with us here on set, so we'll get more details on that in just a moment. But what else we're watching, of course, is Country Garden because they've got that hearing on their debt restructuring. So, again, I think one of the key questions here really at the heart of cases like New World, like Country Garden, like Vanke is do you see the Chinese property market rebounding or recovering anytime soon?
Yeah, Vanke is another one you can throw in there as well.
Exactly.
Discuss. So, all opening up a little bit lower. All right, now, still with us is Huang, managing partner and CIO of Lotus Asset Management. Maybe I'll get your comments as well on the property market in just a little bit, but let's pivot again back to the yuan. It looks like the PBOC is sort of tapping the brakes a little bit on the pace of acceleration towards 7. Why would they be doing that when there's been a growing chorus of economists, significant economists, including the chief strategist at CIIC, saying now is a good time? It'll stimulate a little bit of domestic consumption, give more buying power for imports. What's your case?
Well, I think if you look at the real effective exchange rate of the Chinese yuan, it's probably one of the most underappreciated currency in the world. In the sense that in the last couple of years, the real effective exchange rate has depreciated by more than 25%. So depending on which way you look at it. So I think, it could be one of the strategic moves by the Chinese government, trying to grab market share on the high-end manufacturing sector. But I think now, we get to a point where the Chinese manufacturing sector is producing 13 to 15% of the total value add of the global manufacturing industry. And also, the competitive advantage of many of the Chinese industries are probably doesn't have to depend on the cheap currency, to chip away the other countries' advantage. So I think as a result, this is a good time to appreciate the yuan, and with an reappreciation of the Chinese yuan, there should be a revaluation of the Chinese asset price.
Sorry, but how much stronger does it get into next year?
Well past 7.
Oh,
yeah, it should.
What level then?
Yeah, if you look at back in 2018, right? So when there was the first trade war, the Chinese yuan at the start of the trade war was at 690-ish, below 690. Yeah. Right, so we should go back to that level.
And then you said reappreciation of asset prices. Which assets are you looking at in particular?
Yeah, I think in general the Chinese stocks tend to be a good play. When the Chinese yuan appreciate, there's a close relationship, with a stronger Chinese yuan and a stronger Hong Kong market and the Asian market, in particular the Hong Kong market. I think also, because China is still a large importer of global commodities, and that will all go well for commodity price as well.
We're going to get to Trista in just a minute to talk about the property market. But again, the overarching rhetorical question is where is and when are we going to see the bottom to the market? It doesn't look like we're going to see it given, the troubles at New World, the Country Garden, Vanke and others. Yeah,
I think, in particular, Vanke has been in a bit of trouble, right? So they're probably going to delay the payment. But if you look at what happened in the past couple of years, so on one hand, the Chinese property market continued to decline, but then at the same time, the Chinese economic growth maintains sort of steady as it goes, right, for the past couple of years. So what that means is that, the Chinese economy has been undergoing a transition in the last couple of years, from a overly dependent, property-dependent model into a new sort of a high-tech manufacturing-driven model. And it is showing results. Otherwise, how could you explain, on one hand, the property-related data is so ugly, but then at the same time, the economy seems to be doing fine.
questions actually over the withholding of certain property data as well. And
That's right. Yeah, that doesn't help confidence.
Yeah, probably not.
Yeah, but I think the investors can still pay to get access to it. Yeah.
Morgan Stanley, I'm curious then for your view, if you're saying that, I mean, just in general, that appetite for property. He had a roundtable conversation this week over in mainland China, and Robin Xing, that is the bank's chief China economist, but talking about this need maybe for mortgage aid and for China actually to turn to mortgage subsidies to try and prop up the market. I mean, is that a good policy move? Would you recommend a policy move like that?
Yeah, I think it would be a good policy move. I think they should just cut mortgage rate to zero. So people don't have to pay for interest payment, then they just live in the house for free for a few years, wait until the market bounce back. I think that way, on one hand, you lessen the burden of, people's repayment of mortgage, and then on the other hand, you free up all this money, to do other things. And I think, everybody knows that by the time when it gets to 2020, 2021, the property price has peaked. And I think we're now 30% down from the peak. I still think that there will be further correction to go. But, during this correction, how do you minimize? How do you sort of lessen the pain for people who bought at the peak? Is that, you free up the mortgage payment for those people, and then, let them free up the money to do other things.
I saw a statistic. I can't recall the number right now, but the number of households in China right now that are in negative equity, it's just hard to climb out from. We've seen that in Hong Kong in the down cycles as well. I mean, it's vicious as well. So it's a very difficult one to get out of. But I also, sort of adjacent story is the input cost for the property market. Can you guys bring back up the copper prices that are now the futures, the SFE on the copper? The numbers stood out to me because we did see the global rally in copper overnight to record levels, but up again another 2%. So we are seeing in Shanghai, the Shanghai futures. Well. So you're seeing, that's an input cost to property as well, isn't it?
Yes. Property tend to be very sort of resource intensive, right, and then capital intensive too. I think despite much efforts, trying to rescue the sector, there's still a substantial overhang that is ongoing in the market, and also many of these developers who are now in trouble, they still have thousands of projects being built in the market. So I think in the near term, it's difficult to see an immediate solution to the sector. But then I think over the long term, things would get drawn out, interest rate would be cut, debt would be restructured, and many of the commercial banks may have to shelter, the cost of restructuring.
You mentioned earlier about how Hong Kong stocks in particular can benefit from that yuan appreciation. And another factor, of course, is the Fed easing, again, that plays into the conversation. For your preference around A or H shares then for next year, what do you pick?
I think I will just buy them both. Well, look, this year the Hong Kong market rallied substantially, right? So there's the premium of A share to H share actually lessened this year to a historic low. So I think if history is a guide, then A share should do better than H share in the next year. But then at the same time, because A share is doing well, and also because we're going to see some earnings recovery, and also strong policy support for the economy because it's the first year of the 5-year plan, then Hong Kong, as a benchmark, shouldn't be doing too poorly either.
Mm-hmm. All right, so we're already into December, so I guess I can have you put on your prognostication cap. What's going to be the dominant theme that we're going to be talking about through 2026 when it comes to the China market? I mean, with Central Economic Work Conference is going to be meeting. We're going to have the NPC to set sort of, kind of reconfirm what they've already done behind closed doors, and that's the next 5-year plan. So what's going to be 2026 dominant theme other than geopolitics as they kind of constantly remanage?
Simmering in the background.
Yeah.
Well, I think, one of the dominant theme is that the technology development is going into a accelerated pace. So I think next year we're going to see a lot more stuff going on, breakthroughs in semiconductor sector, AI, large language model and all that, and robotic movements, for example. And then at the same time, we're going to hear a lot more on Chinese consumption. Right? So there will be policies, trying to help Chinese consumers to consume more, spend their money, more social security reform, that kind of stuff. And then I think lastly, we're probably going to talk about more on, how best to resolve the property situation, because it's a situation that has been going on for years.
Because more consumption doesn't mean buying property.
No, buying stocks maybe.
Then, just on that tech story as well, what is the theme then that you watch in particular? Because I think that Chinese tech companies you've obviously got those e-commerce wars that are ongoing, affecting some of them. But the other story as well is around low monetization rates for the cloud companies like Alibaba on that side. Is it more the story that you watch with increasing adoption and driving better profit margins, for instance? What is the actual tech theme?
I think, many of the companies are still spending a lot of money, right? So, but if you look at the development of Alibaba, right? So recently it has made a lot of breakthrough in AI, and also, it's already the second largest cloud computing company in the world. Many people didn't know that. And so I think next year, just now you mentioned that China is going to stop using the H200 chips, with the GPUs,
if they're allowed to buy them.
And the Chinese government is very determined to build its own chip. I think it's making some progress, not yet catching up the U.S. pace, but there are progresses that is being made in China. I think next year is going to accelerate, because there will be a lot more capex going into this sector, and that's why if you look at the semiconductor companies, they're doing exceedingly well this year.
Yeah, and I think one of the things that China has as well is really a finger in many parts of the semiconductor ecosystem as well, from the designers, foundries, material suppliers.
That's right.
Yeah. All right, Hao Hong, thank you very much for joining us this morning. That was Hao Hong, their managing partner and CIO of Lotus Asset Management. And as we've been discussing these developments in the China property sector, also in Hong Kong, because Hong Kong-based New World has failed to get full support for a bond exchange plan that required creditors to accept cuts in the value of their holdings. Let's get more with our China credit reporter, Trista Xinyi joining us for more. So, Trista, yes, we teased you in the open of the markets there that you were here with us, and you are here with us. But just talk to us about this debt swap and what the final results tell us about really the outlook for New World.
Yeah, so obviously not everyone buy this plan, right? So some creditor actually choose to become the holdout, and because if more debt gonna come and their existing holding could zoom higher, so I think that's their bet right now. But I mean, even though New World failed to win the full support, they still gain 72% of that support from those creditors. So it still managed to cut more than $1 billion debt from its existing debt load. So that's, to be honest, it's a really good news for New World. But I think people right now are watching what's going to happen next for this.
That's my next question. Before we move on to Country Garden and Banca and others, what should we be watching for next with New World?
Yeah, I think people are expecting whether they will roll out another round of liability management exercise, because they still have lots of, remaining perpetual bonds with dividend stopper. So that's the key thing investors are watching right now. And also people are wondering whether there will be any capital injection plan coming in or any sizable asset disposal.
I think you're actually heading out there just in a few minutes, but we do have that hearing on the debt restructuring for Country Garden. You're probably under time pressure here because it starts at 10 a.m. So what are we expecting?
So Country Garden today will present its offshore restructuring plan to court, and it will see court's final blessing so that they can, perceive the plan. The plan will help Country Garden to cut more than 11 billion debt. But even though with that restructuring, it's still we all know that because of what happened on Vanke recently. So the property market hasn't picked up yet. So I think people are still facing a lot of uncertainty.
Anything we should be watching for right now on Vanke? You just mentioned them as well.
So Anke, I think everyone's waiting for the final version of the Yuan bond extension plan. So I think that's the key thing we're watching. And also next week, Vanke will hold meeting with Yuan bond holder trying to discuss that disposal. Yeah.
All right. China credit reporter Trista Xinyi, thanks so much for joining us. You're looking soon. You'll be looking at live footage. This is live footage here as well. Oh, yes. There we go. That, I believe, is the Great Hall of the People, G-HOP as we know it colloquially in Beijing, as China gets set to welcome the French President Emmanuel Macron. Obviously, there are a lot of issues with these state issues, with a key European leader coming. You know, Belle, I just came back from Taiwan, where the foreign affairs minister, Lin, was telling me he's made 3 trips this autumn already to Europe. The vice president, Xiaobi Kim, was also in Europe addressing lawmakers. I think there's sort of a full court press movement by a number of players in this ongoing China, Japan, Taiwan dispute, trying to gauge and also garner some sort of diplomatic support for their positions when it comes to the Taiwan issue and one China issue.
Yeah, and I think it's going to be really interesting to see how it plays into this visit, because Macron actually does and has put a lot of effort into developing that relationship with President Xi over a number of years now. But they're obviously in that position, France as well, of being one of the 5 permanent members on the United Nations Security Council. So that gives them the veto power, but it also gives them significant influence really over issues that relate to international peace, security as well.
Sure. I mean, Macron has put forward his own peace plan a while back for Ukraine. Obviously, he has his thoughts on that. China has come up with some certain bullet points for finding a lasting peace. And again, then there's always that parallel as well. Is Taiwan the next flashpoint? So.
Yeah, exactly. So we're going to be watching any comments that we get on the Ukraine war, and also France's plans to address what they've called essentially global imbalances. But China relying too much on exports to fuel its growth. We'll get more on this. As we said, Macron set to meet with President Xi soon. This is the China Show. Taking a look at oil prices this morning and also what's happening across broader markets, because we are seeing really equities. I mean, we're 15 minutes into the session this morning and we started a little bit in positive, but we've since flipped into negative territory. So, I mean, it could be, I guess, maybe some questions around the health of the property sector continuing to weigh. We had some sluggish data out yesterday just pointing to economic malaise. That is what we're seeing so far.
Yeah, it's not an overwhelmingly positive sentiment in the market right now. A little bit tenuous. We thought we were going to be seeing some gains, but again, that's pretty just went unchanged. It was listening to me. They said, well, you're right, Steve. Oh, no, there we go in the red again.
All right, let's take a look then what's happening in oil markets. We'll get more context on China equities later, but oil markets, actually, we have seen oil just ticking up a little bit. It's continuing that way as we get into Thursday trading, but we'll bring in Stephen Sapczynski, who leads our Asia energy coverage. So, Stephen, I think a lot of the question has been really around oil prices, the outcome of what's happening between talks. Essentially, do we get any sort of accord between Ukraine and Russia being signed, and what's the follow-on impact?
Yeah, I mean, that's precisely it, right? So we had the meetings between the U.S. and Russia earlier this week, and the outcome is no breakthrough on a peace deal in Ukraine. Now, prices had been kind of falling over the last week out of an expectation that maybe something would come out of this, right? If there is a peace deal, there's a wide expectation in the market that the Trump administration might roll back sanctions that they slapped on Russia's oil sector. If you're not caught up, they kind of surprised the market in the last few weeks by slapping sanctions on Lukoil and Rosneft, major Russian oil exporters and suppliers, and Asian countries here have been kind of scrambling to find alternatives and not get in the way of the White House's crosshairs. Now, there's also a wider view that if there is some sort of peace deal, it's not just the sanctions, it's just an overall acceptance of Russian oil as well. So that adds more oil to a market that's looking pretty frothy right now, and then turns into an oversupply most likely next year. If you believe the analyst IEA from Goldman Sachs as well, they're expecting quite a big oversupply, and that will further weigh on prices. So the addition of Russian crude just kind of adds to that bearish sentiment.
Hey, Steve, how much is the Venezuela situation where Trump is again reiterating possible strikes on land against drug cartels? What impact on the oil markets will that have?
So there are two things, right? There's the sentiment, which it does have an impact on sentiment. When we saw over the weekend he made those comments, you did see a bit of an increase in oil prices earlier this week. But when you actually look at what Venezuela produces and the actual impact on how much it adds to the market, it's not a very enormous supplier. It's incremental. And so when you actually just take that into view, even if there is action by the White House, we're not going to have a huge reaction on the market.
Hey, Stephen, thanks so much. Steve Stinsky, who leads our Asia energy coverage. We're seeing the live footage here of Emmanuel Macron and his wife are coming into the Great Hall of the People, shaking hands with President Xi Jinping. State visit. I think he's made 4 trips there, hasn't he, since taking office in 2017?
Yeah, his last visit to China was 2.5 years ago, but he's coming into Beijing once again against this cloud with Taiwan in the spotlight. This is really set to be one of the big issues because we've already had China's top diplomat, for instance, Huang, condemning Takaichi's provocative remarks on Taiwan and also already calling for France and China to support each other. So it's certainly going to be maybe not an issue that Macron necessarily wants to address or highlight as one of the primary ones, but it'll be interesting to see for China. I
think it's in France's best interest that they also see a de-escalation in this tension between Japan and China. So again, I don't think Macron will necessarily have absolutely earth-shattering comments on this other than to possibly see a de-escalation at a time when Beijing is not necessarily backing down. State media is ramping up the calls for Takaichi-san in Tokyo to apologize and also for Tokyo to retract those comments that she made about essentially any attack on Taiwan would be a survival-threatening situation for Japan.
Yeah, so you're just seeing here these live pictures again. You've got quite a large delegation that's come with President Macron from France. Of course, there's always that expectation. What business deals are you going to see being signed on the sidelines as well?
So the last time he was in Beijing, well, you mentioned, I think it was 2023, he secured commercial deals, including for Airbus. Of course, Airbus has that final assembly plant in Tianjin, which they're expanding. So again, I think that's what we have to always watch on a state visit. What kind of commercial deals can he secure for French companies?
It's interesting, though, because in the time since his last visit, it's also been a period where you've seen quite a strong pushback from across the EU, really, on China exporting overcapacity. And Macron was someone who was instrumental in persuading the bloc to impose tariffs on Chinese EVs last year. And then also since that point, he's been pushing the EU to try and deploy trade tools to again, respond to those Chinese restrictions on rare earths. So, I mean, yes, you want those deals, but you've also got to balance the trade imbalance, essentially, between the countries.
I'm curious to see as well in these talks, of course, we're not going to be there. We're not going to be the fly on the wall. But for the readouts on what is said and what Macron will say directly to Xi Jinping about the support that Beijing is giving to Russia in the war in Ukraine. That is something that is very dear to European leaders.
Yeah, he certainly has really had a long running push, essentially, for President Xi to try and use his influence to end that war. But I think actually, talking about fly on the wall and curious for the readouts, I think what's going to be also interesting from this trip in particular is just the amount of time they're going to have to talk through the issues, because what sets this state visit apart from others that we see, or what makes it also particularly unusual, is that aside from these formal meetings in Beijing, the two leaders are actually going to be heading to the southwestern city of Chengdu, according to the French president's office. So that is actually quite rare for Xi to meet a world leader at a second location outside of the capital.
In Sichuan province. So again, spending 3 days in Beijing.
Yeah.
Or in China.
All right, we'll leave you there with those live pictures. As you said, Emmanuel Macron, the French leader, meeting with Chinese President Xi Jinping. More ahead. You're watching The China Show. Welcome back to The China Show, and we are taking you to live pictures this morning of what's going on in Beijing, because we have Chinese leader Xi Jinping welcoming the French president Emmanuel Macron to Beijing. He has been to the Chinese capital several times in the past, but actually not in the last 2.5 years. So lots on the agenda coming into this state visit.
I mean, everything from Ukraine to obviously trade restrictions and export controls and selling, French goods into China and vice versa, as well as Taiwan. Beijing will be looking to get Macron's support for the narrative that Beijing has been pumping out in recent weeks, and that is, of course, there is one China, and that's been their steadfast position. But again, state media has been kind of reworking this post-World War II narrative that essentially started with the Cairo Agreement before the end of the war, Potsdam Declaration at the end of the war, and then the San Francisco Treaty in 1951, essentially that Taiwan belongs to the rightful ruler of China, even though the Republic of China, Taiwan government, essentially was the power at the end of the war. So there's an interesting narrative that is being pushed by Beijing right now.
Yeah, essentially trying to frame it as a domestic issue and not one in that case that deserves any sort of international interference.
Well, that the post-World War II order that was designated by those agreements essentially cedes Taiwan to mainland China.
All right, let's take a look at what's happening in markets this morning, because we're half an hour into the session so far for Hong Kong mainland equities, and we actually have seen a reversal of sorts. You can see the CSI 300 0.3% under pressure today, but it's actually quite mixed moves that you're seeing. I mean, you've got the Kospi down around 1%. You've got the Nikkei moving in the other direction, up 1.3% in the session today. What could be playing into the Japanese story as well is the Japanese banks, because that has been really one of the best performing sectors, the financials, these expectations. You're going to see the BOJ moving when it meets later this month. Speaking about central bank activity, of course, you're counting down to that all-important Fed decision. Yesterday, we had the ADP jobs figures, for instance, further signs of weakness in the labour market. And so it, again, tells you that stage is very much set for easing in the December meeting. What happens going into 2026? But equities across the board are just moving a little bit higher so far. China, as we said, we've really just seen it sort of fluctuating a bit in the session, but now mostly moving to the downside this morning. Really, if you take a look at where is our attention fixed this morning, it's been very much that pushback we saw from the PBOC to what has been that yuan appreciation, heading back down to the 7 handle. We just had Huang on, for instance. He's saying you're going to go below that coming into 2026, 6.9, even testing 6.9. But let's look at where the currency goes from here. As we said, the PBOC setting its daily reference rate for the currency at the weakest level we've seen relative to estimates going back to 2022. So joining us is our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Stephen Chu. So thanks, Stephen. What did you think when you saw that fix crossing earlier today?
I think it makes a lot of sense because obviously China wants to slow it again, especially when it touches, it breaks 7, it's going to accelerate. And now, as you said, we still have the Fed coming in. If we have a very dovish decision hinting for more cuts next year, the dollar drops, that will be a problem for an even stronger yuan.
You think that's why, because the chorus coming from the U.S. right now is pretty much a foregone conclusion that there will be a rate cut from the Fed next Wednesday, 25 basis points, I think is the consensus. But that is the beginning of further dollar weakness. PBOC wants to get ahead of this.
I think it's beyond that. It's more about the new Fed lineup, whether we're talking about a new chair or like the new members. It's very likely to be more dovish compared to what we have right now. So if that happens, if market sells off the dollar, then the yuan will have to rise passively anyway. So now protecting that 7 before they get more clarity regarding the Fed situation is very important.
Yeah, I guess sort of the wild card in that situation is the level of comfort that traders might have with someone like Kevin Hassett being at the head of the Fed and maybe creating a little bit of jitters and the risk of another Liz Truss moment. But what's the level that the PBOC feels comfortable with the PBOC, rather with the yuan to sit at, and in what sort of time frame do you think?
I think from a bilateral basis, obviously 7 is the one they're looking at. From a basket perspective, now we're talking about a CFS basket of 97, 98, which is very close to where we were at the beginning of the year. So I think around this level, they will protect it. But I do agree that the yuan will strengthen regardless going forward.
Does it need to strengthen at this time? Because that's, again, the chorus of economists from the CIIC and others are saying now is a really good time. They want to boost domestic consumption. They want to import more.
Actually, I'm going to brag here because we had the view since September that yuan is going to rally beyond 7. And that's not just because of the dollar. Because if you look across Asia in the second half of the year, we had a strong dollar. But yuan is still one of the outperformer and still rally. And that's down to fundamentals. Let's just forget about the US-China trade troughs. Just look at China alone. We look at like the exports, trade surplus, FDI coming back. All this are basically building up yuan appreciation pressure.
What's the flow on then into the bond space as well? Because even just looking at what's been happening in the debt market this morning and yesterday, you saw that 30-year government bond rising the most, the yields since October.
Yeah, we're happy about that. Again, a second brag for the day. We had the view of higher yields as well in GDP space. Obviously, this year the sentiment in China is better, a better equity sentiment, and also like the easing expectation for PBOC has eased a little bit. So yields are way too low compared to fundamentals. So for 10-year, we think at least we have to go back to near 2%.
Fellow Stephen, brag all you want. That's good. That's good. You can find all those calls on the Bloomberg terminal.
That's right. All right, that was our Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu, who has been right once or twice, it seems. All right, let's get more on the market action. Bring in Thomas Poullaouec. He's head of Global Investment Solutions APAC and portfolio manager at Rowe Price as well. So, yeah, I mean, we can maybe get started on that, the expectations around, okay, where the currency goes, but let's just talk about the Fed first as well and this expectation for easing and what that easing cycle actually looks like, because I think there's quite a bit of divergence that's forming now on exactly how many more cuts are needed.
Yeah, that's correct. Look, it's pretty much a foregone conclusion for this week. But for what matters is next year. I guess what we see is that we are a bit more sanguine on the U.S. economy, where we, of course, the job market is something to monitor, but it's fragile, but not really cracking much. And we see some inflation pressure continuing to be there, with service inflation in particular being quite sticky, and also goods disinflation stopping. So we see that the Fed might not be able to do as much cut as what the market is pricing, and that could push yields higher.
So before we start talking about, obviously, some of your main conviction calls, including EM stocks and how that possibly, an easing cycle from the Fed is going to weigh or impact this part of the world, I want to dovetail from that inflation picture as well in the U.S. with gold and copper. We're seeing record highs again with copper. I think a lot of shipments are coming in ahead of possible sanctions or tariffs, on that metal. So what's your outlook then as a conviction call as well? The continued rise of gold and then copper prices at record right now.
Yeah. So I don't want to brag.
Why not?
Please do. Yes. We welcome it.
No, but that's copper miners has been a position that we started in 2023 and is still a long position in our portfolio. Similarly, gold miners has been something that we incepted more at the beginning of this year. And this is on the back of strong capital expenditure, strong capital discipline from these miners, which was not the case in the past. And the fact that this is more structural imbalances between supply and demand in these two metals, which are really bringing prices of the metals higher, yet the cost of production is quite lower. So instead of going long the metals, I would be preferring to go long the miners, because you have a more higher beta sensitivity to the price of the metals, and you are benefiting from strong corporate governance, which are generating free cash flow as well as a good dividend yield. Yeah.
Then another sector that you're also positive on is healthcare, which is more of a defensive play. Is that how you look at it?
Yeah, it's at some stage you also want to see some of the turning point in some of these sectors. It has been an unloved sector for quite some time. It has been underperforming the market for quite some time, and yet you have a lot of things that are turning around. In fact, Warren Buffett was more of a catalyst when he decided to invest more in the sector in September, October. And there have been a better positioning in that sector, which very attractive valuation to start with. Yet you can see that is one of the sectors that AI could be a beneficiary. So to me, it's more, we are moving from in 2026 for a world it was more about AI supplier to AI adopter, and I see healthcare as one of the beneficiaries of that.
AI as a tool for better efficiency or diagnostics?
I would say both. Yeah. First is more the computing power is helping on the diagnostic tool and to really making sure that they could potentially discover faster some cure or medicine. And then you have also efficiency, which we are seeing in all industry, which are prone from AI disruption. And that's where I see that margins could be improving despite some of the issues that we may be discussing on the labor market.
On the AI front, though, I think we've had sort of two stories out this morning that are sending a little bit of a note of caution around AI demand generally. I'm thinking about Microsoft, for instance, that's been forced to deny, essentially. There's been a report of it having slowing demand for some of its AI tools. Snowflake, for instance, is also reporting of weaker demand for its AI products. I mean, does that also create concern next year about, I mean, we've already had the concern about the AI bubble, but does it even intensify in 2026?
I think it's that story where you need to do research on who will be the winner and who will be the laggards in that AI revolution. It will take time to really unfold. Google, for example, was quite penalized at the beginning of the year and now is viewed as a leader.
Yeah.
So I think it's too early to be too negative on Microsoft or others. It will be really, they have no choice to invest. CapEx is really a way to maintain their dominance as hyperscalers. And it's something that they will continue to do. So I will not be too negative on Microsoft and not too bullish on Google, because it will really continue to evolve and you have to adapt to this change.
I alluded to it earlier. One of your top conviction calls are EM stocks, but where amongst the EM?
So we are still bullish on Asia, including China. That's an area where you have, no matter who wins in the AI revolution, Asia is a supplier of some of these tools. So Korea, Taiwan continues to be preferred in our models. Korea, you have also the corporate governance story that is a long journey to unfold. And for China, it will be more the China tech sector. We are earlier than in the US in that race. They have to develop their own ecosystem. And what that means is that we can see a long journey to benefit from that China tech sector.
So really, when you take that read across, then you're continuing to favour allocation to the tech sectors across those benchmarks?
Yeah, and especially outside the US. I think in the US you have to be a bit more differentiating. And in the US I would play more for the broadening of the markets. Because valuations are a bit too high on the tech sector. At the same time, I see better opportunities outside the US.
In China, would you be looking at eventually the AI suppliers, the ones that are developing, or those that adopt first, those that are truly adopting these lower cost models in China?
Yeah, I think in China you have to look at both, because the supplier will be definitely in favor at start. Yes, China is developing an AI ecosystem that is potentially more efficient than in the US. But they will go through the same phase where you need to invest first before you see the adoption and the adopter being favored. So a bit more on the supplier in China compared to the US.
Thomas, thanks so much for your time.
Thank you.
Bloomberg Television coming in there. Thomas Poullaouec, Head of Global Investment Solutions, APAC, and Portfolio Manager at T. Rowe Price. Still ahead, UK Prime Minister Keir Starmer is set to approve a massive new Chinese embassy in London, reviving plans for a diplomatic reset with Beijing. Details and much, much more coming up next. This is The China Show, and this is Bloomberg. And welcome back. You're watching The China Show here on Bloomberg Television. The presidents of France and China are currently meeting in Beijing as Emmanuel Macron begins a 3-day trip to China. Let's get more from our China correspondent, Min Lo. So, Min, how much is Taiwan really going to be at the center of these talks? There's so many other global issues that are coming to the fore, obviously, with Ukraine and also trade.
Yeah, well, Taiwan has been an important issue ahead of the trip because we already got lines from that from the foreign ministry, and we had Huang calling the diplomatic advisor of Macron ahead of the trip. But to be honest, I think this is an area where the room for negotiation is very narrow. On all issues of geopolitics, whether it's Taiwan, whether it's Russia, that's where I think we see the least room for a big outcome. But where we could see more movement or forward movement or progress is perhaps the trade issues, right? And I think you can get a sense of what is important to France by looking at who is accompanying him on this trip. If you put up the graphic there, you can see we have the head of Airbus, and we know there is a Chinese aircraft leasing company that is in talks to try to negotiate a deal with Airbus. We have have the head of Danone, we have the head of Remy Cointreau, which is the cognac company, and that shows you that Macron is still hoping to push back or get China to lift those tariffs on French cognac. And of course, there is still French dairy, French pork products that are still under a probe right now. Those conclusions are still not completed yet. And I think he'll be pushing back against any potential tariffs. And of course, this is all in retaliation to the EV tariffs that the EU has imposed. And France had been a key player at the time in shaping the EU opinion that eventually led to those tariffs.
Just seeing them earlier, inspecting the guard here. This is not live footage, but what is notable about this trip in particular as well is just the fact that it's going to include more stops than just Beijing.
Yeah.
So they're heading to Chengdu. And what else can we expect to be on the agenda?
Yeah, I think it's interesting, as you said, it's quite rare that a foreign leader gets to meet Xi, not just in Beijing, but Xi is traveling with him to Chengdu as well. And when I think of Chengdu, I think of the pandas, right? Yes. That's where the conservation base is. So I bet probably they're going to make a stop there for some, panda diplomacy. But Chengdu is a place where you get cheap electricity. There's a lot of hydropower in the Sichuan area. So it's a heavy industrial base. That's where you have a lot of biomedical companies there. You have a lot of autos. You have aviation. So it's an important industrial base. So they might be negotiating some deals. We know the French side has hinted that there could be energy and transport deals that are on the table. Of course, don't forget, critical minerals is something that the French will want to push for as well to ensure that they can get those supplies without delay. And I think another important context is France is going to take over leadership of G7.
Yes.
And they'll be hosting that next year. And we previously reported that Macron was floating the idea of inviting President Xi to attend the G7 summit. I mean, something that is, I don't know if President Xi would be open to that, just given how hostile the rhetoric has been from G7, but clearly Macron would have some power in shaping the G7 conversations there, and there's a lot of things for both sides to iron out.
Yeah. Great reporting there, Min Min. That was our China correspondent there, Min Min Lo. But let's also shift, because it has sort of been one of the questions, is the UK getting a little bit left out, essentially, as governments push ahead with forging these ties with China?
Macron in Beijing, I think Merz is going to be going to China as well, the German Chancellor. So, yeah, there might be some of that.
So what we understand now is that the UK government could be poised to approve China's plan for a massive new embassy in London. That's as Prime Minister Keir Starmer looks to revive his push for a diplomatic reset with President Xi Jinping as well. Let's bring in our executive editor for Greater China, that's John Liu, who's joining us this morning from Taipei. And John, just talk to us about exactly where the relationship stands between the two countries today, and why this embassy as well has become such a big sticking point.
Well, so this embassy that China has proposed to build in London, it would be the largest diplomatic location for China in all of Europe. There's been a lot of controversy. There were some gentlemen in the UK charged with spying on behalf of China. Those charges were later dropped. There's been a lot of criticism of how the British government handled those allegations. And the British government has also postponed the decision on the embassy a number of times, most recently to the end of to the end of January. And as we understand now, Prime Minister Starmer is planning to approve the embassy on around January 20th, and then make a trip to Beijing at the end of that month.
So, John, we talked about it a little bit before we came to you, and that is essentially the UK, well, at least Starmer feels that they're being a bit outplayed by other rivals, whether it's Germany and France, as far as having a more sophisticated approach to dealing and engaging with China. Is that at the forefront of approving this new embassy, and also just Starmer saying we need to engage with the world's second biggest economy?
Well, certainly, global trade has become more challenging because of the role that the United States once played, and it's sort of that role is beginning to transform under President Trump. And the UK, France, Germany, many of the European allies of the United States, they're looking to for other markets for their goods. That's why Macron is here in Beijing this week. It's why we had the Deputy Chancellor of Germany visit earlier last month. It's why Prime Minister Starmer is planning to come. He himself said in London that his government wants to take a more pro-business approach to the relationship with China, at the same time not sacrificing national security concerns. And I think making sure that China, the market here, is open to British businesses is going to be at the top of his agenda.
It's interesting. Starmer's comments have been quite critical, obviously, of the former conservative leadership, but essentially saying it has been a dereliction of duty not to engage in China, with China. So is this sort of the opening that Starmer sees to have a new era with Beijing?
I think he certainly would like to increase the amount of trade between the two countries. That's going to be constrained by those concerns about national security. We talked about the allegations of espionage. Obviously, China's diplomatic, economic support of Russia's war effort in Ukraine, that is a big sticking point for many of the European countries that at the same time want to do more business with China. And also, there is this increasing large volumes of exports coming from China to Europe, be it in the form of Shein and Temu in terms of cross-border e-commerce, but also in lots of other industries. And there is a concern that Chinese exports could overwhelm a lot of local British businesses. And so there's a lot of things that need to be balanced. But all in all, I do think that Starmer sees this relationship as being an important one, one that can help prop up the British economy.
Our executive editor for Greater China, John Liu, joining us this morning from Taipei. Thanks a lot, John. Plenty more ahead. This is The China Show, and this is Bloomberg. All right, welcome back to The China Show. All right, here are some other tech stories we are following. Microsoft shares fell in the regular session overnight after a report of weaker demand for some of its AI tools. The information says several divisions have cut quotas for AI product sales increases after many missed their targets. Microsoft denying the report, saying aggregate sale quotas for its AI products have not been lowered. Bloomberg has also learned that Meta has poached Apple's most prominent design executive as the social network accelerates a push towards AI-enabled consumer devices. Alan Dye had run Apple's user interface design team since 2015. Sources say it's replacing Dye with longtime designer Stephen LeMay. Interesting development there, Belle. We'll chat about that a little bit later. Plenty more ahead. This is Bloomberg.
All right, it's 11:29 a.m. in Tokyo, and Japanese markets are just going on their lunch break in a minute. It has been a very strong session. We're watching the financial sector in particular because we're seeing very strong moves in bonds this morning, and it is this anticipation that we have continuing to build around what the BOJ does at its upcoming meeting. I think it's actually scheduled for December 19, so in a couple of weeks from now we will have that Fed decision as well for the BOJ to reflect upon. But we have really seen just sort of an inevitability building in that 10-year yield tracking. I mean, it's at the highest level now since 2007, but perhaps that 2%, we're marching toward that. So that really could cause some havoc in secondary markets across the yield curve. But as we said, that focus really on the Japanese financial sector, because lenders are the big watch for us. You've got that rotation into the sector. It's continued to really accelerate as well. We have seen again, these BOJ rate hike bets, they're rising because we've had Kazuo Ueda's comments about them as well. So let's cross to Aya Wagatsuma, who is our Japan equities reporter in Tokyo this morning. So Aya, let's just talk about the bank stocks. I mean, you can see that even on a 2-month basis, it's been very strong gains for the sector. How sustainable is that, and how much more movement do you see to the upside, given that you, again, have seen that strong performance year to date?
Great, thank you so much. For the Japanese banking stocks, as the Bank of Japan will have a decision this month, there will be more gains for the Japanese banking sector for at least this month as well as next month as well. As for the overnight index swaps, we can see that there's a more than 80% chance of a December rate hike and around more than 90% for January. So as long as these rate hikes speculations go on, the banking sector will continue to gain further.
Now, there's been a rotation, obviously, into banks, but at the expense of chip stocks. Why is that? What's going on with the chips?
So as for the chip stocks, there has been concerns that there is an AI bubble at the moment. And therefore, a lot of investors are a bit wary and cautious on the AI chip stocks. And especially so because the AI chips have been gaining for a really long time this year. So people have been moving towards banking sectors and rotating into them rather than taking profits on the semiconductor sectors. As of yesterday, the MSCI Japan financials was up 7% last month, while for the MSCI Japan Semiconductors Index, they were down 7% last month.
What is the next area that investors should be watching for then, do you think?
The next thing that investors should be concerned about or actually looking into would be what the policy message will be from the Bank of Japan this December, as well as the Bank of Japan Governor Ueda's speech after the rate decision comes out on December 19th. Right now, the yields are currently very high at the moment. And Japan's 10-year yields are near their 2008 high. There are concerns around the yields going up too high with the Japanese banking sector. If there is an increase in the interest rates going up too high, there could be an increase in securities valuation losses. So there are good things and bad things for Japanese banking banks should interest rates go too high.
Aya, thanks so much. Japan equities reporter Aya Wagatsuma joining us there from Tokyo. Joining us now is Carie Lee, global market strategist at DBS Hong Kong. Welcome, and thanks for joining us this morning. So the overarching theme this morning, and it was on the markets overnight, was the bets have increased that there's going to be probably 25 basis point cut next week when the Fed meets. Is that what you're baked in? And how many more cuts going into the new year?
Okay, so actually we also believe that there will be a Fed rate cut next week because the data already shows certain weakness in the U.S. labor market, like the ADP employment change last night. And the thing is that after the next week's interest rate cut, what will be the rate cut trajectory into 2026? We think the Fed may only have another rate cut in 2026 because actually before Fed Williams talked about how he supported a near-term rate cut, before that, quite a few Fed members actually, they talk about their concerns about inflation. And they prefer to be cautious about future rate cut trajectory. So in next week's FOMC meeting, actually our focus will be more on the dot plot to see whether they will prefer to remain cautious next year or to lean towards the dovish side, because the market is now pricing in kind of 2 to 3 cuts next year, which to us looks a bit dovish.
Yeah, exactly. And you sort of seen that being reflected and maybe that big question mark as well. Then again, going back to the dollar, what's sort of the key ranges that you're looking at then for it to hold?
Okay, so for the dollar index, we see a very strong correlation between the dollar itself and the Fed rate cut expectations. So recently, we see an increase in the bets on Fed rate cuts. So the dollar index actually retraced lower quite a fair bit, but somehow it still hold above the 98.5 level. So if next week we're going to see the Fed being less dovish than expected, then probably the dollar index is not going to fall much further. Also, don't forget there is some seasonality actually also weighing down the dollar index. Apart from that, we don't see a lot of reasons to chase the dollar lower from here.
Let's pivot out here with the Japanese policymakers. Obviously, there's all kinds of speculation about how, bullish they will be on increasing their rates, or hawkish, I should say, on increasing their rates. What's your expectations into the new year that the BOJ will have to start tightening? And what does that mean for the yen, which has been just languishing at 155?
Yeah, so for the BOJ, actually, we also expect them to hike interest rate this month because, firstly, we have this sticky inflation. Then the wage growth has been steady, and the Japanese yen has been quite weak. And more importantly, BOJ's Governor Ueda already hinted at a rate hike this month. So we do expect it to come up later. And next year, we also expect the BOJ will have another rate hike to 1%, bring the policy rate to 1%. The thing is whether there will be a big gap between this month's rate hike and the next rate hike, because for the market now, it's expecting even if there is a hike in this month or January, the next hike will only happen in the second half of next year, which means there will be a long pause. Yeah, in that case, it would not be a very good news for the Japanese yen bulls.
Right, so it'll probably languish around 150. I'm not asking you necessarily to give us a number, but there has been no appreciation momentum in the yen, despite all this jawboning of hiking.
Yeah, basically for those investors who really turn bullish on the Japanese yen, they may need to have a very certain timing of continuous rate hike from BOJ to come up. But this seems to not be the case. And on the other hand, for the Fed, if they remain less bullish or less dovish than expected, then there will be still a very wide yield differential. Then this negative carry probably is going to cap the downside of dollar yen around 150.
Yeah, exactly. It's also the dollar story as well, the direction for the Fed that very much plays into it. The story today as well has been really watching what's happening with the Chinese currency, and we saw that fix, the strongest that we've seen relative to estimates going back to 2022. Where do you see the currency heading?
Okay, the market has turned quite positive in terms of the renminbi lately, but we tend to be more cautious with this round of strength in the renminbi because we do see quite a few positive drivers supporting the renminbi. Say, for example, a better relationship between U.S. and China, capital inflows into China's onshore market, lower and lower fixing rate, and of course the seasonality, which means exporters, they try to convert the foreign currency holdings into renminbi. But also we see from the data, like the PMI data, still shows some sluggishness in China's economy. And probably because they want to support the exports, they don't want to see very strong renminbi at this juncture. Right. So the fixing has been set above traders' estimates. So we will see the range between 7.06 to 7.08. If there is a firm breakout below this range, will we later see another target around 7.02?
What do you think is the rate, say, mid-year next year, that the PBOC would be comfortable with? Is it going to be stronger than 7, 6.9?
At this juncture, we don't see the dollar CNH actually falling below 7 mark because we still believe that they try to maintain the stability of the local currency instead of further strengthening it, because still export is the concern. Because they don't want to actually jeopardize this very key contributor to China's growth at this moment. And of course, on the other hand, once again, it's a dollar story. If the US dollar remains supported, there is also not much reason for the renminbi to strengthen much further from here.
The PBOC also has been a major buyer of gold. Yeah. Do you see that buying? I mean, we've already seen sort of moderation from central bank buying generally, but what is the gold outlook for you?
Yeah, it's quite interesting because over the past few years, it has been the central bank buying that's supporting the gold. So the central bank tend to buy and hold, seldom sell their assets. So the gold don't see much decline before this year. But this year, actually, central bank buying has been moderated, and the major demand has been the investment demand and the retail demand. And those kind of investors, they do sell to take profit or to cut loss or for whatever reason. So gold price seems to have more volatility this year. However, we still think out of the market, actually beyond the fiat currency space, there is seldom asset that is so good to hedge against different kind of uncertainties like geopolitical risk, Fed independence concerns, U.S. fiscal sustainability concerns. Gold is still a go-to asset for the investors. So this kind of demand may remain strong, and we still believe that gold will recast its historical high or even go higher towards $4,500 per ounce in the first half of next year.
All right, still solid bullish trend maybe. Carie, thanks so much for joining us this morning. That was Carie Lee there, Global Market Strategist at DBS Hong Kong. I will have plenty more ahead. This is Bloomberg.
And welcome back to the China Show. Russian President Vladimir Putin is set to arrive in India later today for his first visit since Russia's invasion of Ukraine. The trip comes as sanctions and U.S. pressure seek to curb an energy trade vital to Russia and critical for India. Let's bring in Bloomberg's India government reporter Sudhi Ranjan Sen from New Delhi. So, Sudhi, what is expected? Any big announcements expected?
Well, the big thing about the visit, of course, is the message that it goes out, coming at the time as it does. It's a state visit that India is extending to Putin, which means there's going to be a lot of show pomp around the visit. On the expectations and deliverables, the question about both sides are framing this entire visit around trade and more commerce. India definitely wants to reduce the trade deficit that it has with Russia. Over the last couple of years, and especially after the Ukraine war, India started picking up more Russian crude, leading to a higher trade deficit. Both sides are trying to cut down that deficit. But questions about defense and issues about buying more Russian crude, we know that the United States has sanctioned major Russian companies, leading to a drop in crude. So all those remain. What are the likely deliverables? We may expect, we are likely to see announcements on buying more Indian products to cut down that deficit, and also maybe something on, something to help trained Indian professionals move to Russia much more easily. That means a mobility agreement is being talked. These are the things that we are being told by by officials in the foreign ministry in India.
Yeah, I think that's a very big question. If you see any sort of accord, does that also jeopardize New Delhi's talks with Washington just when they're trying to ink a trade deal? But talk to us about sort of the overall overarching importance of this visit. Just why is it so significant?
Well, to begin with, it's the timing of the visit. Although, India and Russia, leaders of India and Russia meet once a year, and it is alternative once the Indian Prime Minister, alternatively the Indian Prime Minister goes to Russia and the Russian President comes to India. This has been there for the last 2 decades now, ever since India and Russia, decided to have a strategic partnership. But given the timing, the fact that the Ukraine war is there are peace discussions, a peace plan in progress under discussion with the United States. At the same point of time, President Trump has made it very clear that he doesn't really like India buying Russian oil, Russian military weapons. The visit at this point of time kind of shows that India, which is negotiating a trade deal, hasn't been able to get that, is also trying to signal to the United States that it's very capable of deciding its foreign policy, who it's maintained its relationship independently, despite what the United States thinks. And that is the key importance of this visit. Also, this is a state visit, which means the entire state is out, to make this visit a very big visit, so that the messaging around the visit is kind of shows that India is also trying to send a message to the United States that fair enough, the trade deal hasn't come, ties are not so good, but we have other friends and other allies. It's the same thing that the Russian president will also try to show, and what experts and analysts tell us here. For Russia, it's a message that it's not, so to say, a junior partner of the Chinese, but it has its own independent foreign policy and friends, most importantly, friends like India.
Sudhi, thanks so much for joining us. That was our India government reporter, Sudhi Ranjan Sen there. And just as we were talking, there has been a redhead crossing the terminal this morning, and this is the property developer Country Garden. Its debt restructuring plan has been approved just in the last few moments by a Hong Kong court. Now, this was it's more than $14 billion debt restructuring plan, essentially. It's been 2 years of restructuring talks with this company. So they'd already got the backing of this from debt holders, but just getting that green light now from the Hong Kong court means that the plan can proceed, essentially.
This is absolutely critical. Yeah, you're right. They got the shareholders' approval back in November, now essentially getting the green light to go ahead, because they really wanted to avoid the fate of China Evergrande, which was ordered to liquidate. And again, this was once the biggest home seller in China by sales. So essentially, this is a lifeline for them.
Yeah, it's been as well just the culmination of what's been a very protracted negotiation process that at times was really on the verge of collapse. But even with that, the company's future is still very uncertain because, to your point, you've got those concerns around China Vanke delaying their debt repayment. What does that portend generally for the China property space and demand that we see as well?
Well, the demand hasn't returned, right?
Exactly.
So there hasn't been a floor put on that, and there hasn't been a big bang stimulus from the Chinese government other than to essentially protect people's mortgages and the negative equity. But what about the developers?
Yeah, more focused on the projects themselves, not so much on the companies in question. But let's get back to India, because the rupee as well has slipped past the psychological, that's a key psychological of 90 per dollar. Delays in sealing, as we were discussing just then, that crucial trade deal with Washington is certainly hurting sentiment as well. So let's get more with our emerging markets macro strategist, Marcus Huang, who joins us this morning from Singapore. So, Marcus, just talk us through it. We mentioned there that the sort of primary driver perhaps being around this delay on the talks with Washington, but where exactly or how low can the rupee go in the near term?
Well, that's a brilliant question, right? I think, going ahead for the last few days, ahead of this $90 level, people are wondering whether, it'll be breached. And we just saw it breached just this week. So, I mean, it's hard to point a certain level to a low at this point in time, because, as you pointed out, the fundamental factors for a bearish rupee are there. There still doesn't exist any trade deal between India and US. And just remember, the tariffs on India basically are the highest in emerging Asia at this point in time. So you take a step back, just a few weeks ago, there was some sense of optimism that a trade deal could be closed in the near term. And I think this flowed into expectations for investors, as well as the Reserve Bank of India. We saw them defending the rupee at varying levels throughout this time. But there's a sense in the market now that, the RBI might be more tolerant of, rupee weakness moving forward. Possibly because they are partially trying to preserve ammunition, preserve their foreign reserves. Because if, the idea going in was basically to defend the rupee up until the point there is a trade deal between India and the US. But, as we head into December, as we head towards the end of December, I think investors are increasingly skeptical over a possible trade deal in the near term. Of course, this is up in the air. But, what could only see a meaningful turnaround in the rupee will, of course, be a trade deal. That, of course, has flowed to expectations. For example, traders were saying that exporters have refrained from selling dollars. on expectations that the rupee might weaken even further. So all these, of course, has exacerbated the weakness in the rupee. We've actually just seen the dollar rupee NDFs this morning Asia time fall to a fresh record low. So all we can say is that the rupee could be headed for more weakness ahead.
So what other events are we going to be looking at? You talked about a possible trade deal that has been in the works, but also I guess the central bank is limited in its ability as well as its intent to keep on intervening.
Yes, I mean those factors are at play. Aside from that, you're right to say the intent as well as ability. And one thing that investors are looking out for, especially from a domestic perspective, would be whether RBI cuts rates at December meeting. Of course, the comments from the RBI governor recently suggested that the December rate cut is actually really a real possibility. But because of the weakness we've seen in the rupee, there's some analysts in the market are actually doubting that actually a rate cut will happen. Because, of course, a rate cut might even lead to more rupee weakness. Although that's being said, RBI holding rates may help the rupee at the margin, but as a real turnaround can only be seen from a US-India trade deal.
All right, Bloomberg Emerging Markets macro strategist Marcus Huang. Good stuff. Thanks for joining us. More to come on the China Show as we wrap up this Thursday edition. This is Bloomberg.
Quick check on markets this morning, and one of the big sectors that's in focus is what's happening in the robotics space. I think this is actually interesting because there's this reporting from Politico that the Trump administration may go all in on the robot sector next year and issue perhaps an executive order to try and ramp up production. These are the China names, though, and they're actually still benefiting out of this, even though a lot of focus has been on where would be the Asian supplies into the States. But China copper stocks, the other one that we're tracking very close. So we have seen that metal hitting a fresh record. There's this risk of a tariff-fueled squeeze. But that's it for the China Show. Insight is next.